So I came up with the phrase triple digit silver, and I see it's being copied now a few times. I'm no longer the only one saying it, which is nice to see. I was the first to say it, but I think we'll get there. I think, you look, it's a simple math. You call it 10 to 1 because it's easier to calculate, but you talk about $2,700 silver divided by 10, that's $270 silver. And I think we'll see that in the silver market because it's such a tiny market. We're producing 830 million ounces. You multiply that by the current metal price, call it $30, and it's what's that work out to? That's 15, well, more about 20 billion a dollar market. How many times can that fit into Apple or Tesla or Nvidia?
In today's episode, Keith Neumeyer, CEO of First Majestic Silver, shared his bold prediction: silver prices are headed for triple digits. Neumeyer highlights a glaring disconnect between silver's mining ratio, 7 ounces of silver for every ounce of gold, and its market price ratio, about 85 to 1. This undervaluation, he argues, is unsustainable given silver's growing industrial demand. With sectors like solar energy, electric vehicles, and nuclear power consuming record amounts of silver, Neumeyer foresees a supply shock on the horizon. He predicts that a shortage, such as a manufacturer unable to source silver, could send prices soaring. For the mining industry to meet this demand, he says, silver prices must exceed $100 per ounce. Neumeyer also points to market manipulation by large banks trading billions of ounces of paper silver with no physical backing. While this has suppressed prices, he believes the fundamentals will ultimately force a correction. Markets can stay irrational for a long time, Neumeyer says, but they always return to reality. For him, triple-digit silver isn't just a possibility, it's a necessity for the future of the silver industry. Before we dive into the best clips of the latest interview, make sure to smash that subscribe button and check our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest and most reliable service out there. Just a few clicks secures your data and keeps unwanted eyes at bay. Plus, if you're a stacker seeking truly independent market insights, visit goldsilverstacks.com for our Stacker's Handbook. Loaded with strategies to safeguard your financial future so you don't rely on commentators for market insights. Enjoy the episode.
Well, I've come up with many phrases throughout my, 21 years running this company. Strategic metal. There's no substitute to silver. Copper's the highway, silver's the glue, which was one of the newer ones I've come up with because you look at a device, any kind. It could be electric car, computer, cell phone, a toaster, a refrigerator, a freezer, whatever the case may be. There's copper in all those components, but it's glue that it's silver. That's the glue that holds it all together. So it's extremely important metal. And when silver went to 50, because I was calling for $50 for the first 10 years of running this business. And then when it went to 50, like the banks, BMO, I remember reading all these research reports, and I think BMO stands out, and they had a $70 target on silver. And so, I figured, geez, $70, that's pretty conservative. Because I looked at the mining ratio and I looked at the gold price, and then I said, we need $100 silver, just to justify the mining industry to go after silver to increase production, because the mining sector is not going to do it unless we have sustained higher prices. Because even at $30 silver, the margins aren't there to really give us enough profit to go and invest the billions of dollars necessary to get more silver into the marketplace. And so I came up with the phrase triple digit silver, and I see it's being copied now a few times. I'm no longer the only one saying it, which is nice to see. I was the first to say it, but I think we'll get there. I think, look, it's a simple math. You call it 10 to 1 because it's easier to calculate, but you talk about $2,700 silver divided by 10, that's $270 silver. Now, I've never suggested $270 silver, But really, if you look at the mining ratio, that's where it should be. So triple digit, $100+ silver should be easily achievable. Being a trader, on the floor of the, Vancouver Stock Exchange for 6 years, and, I see markets that are not perfect, because there's too many sellers or sometimes there's too many buyers. And it takes a while. That's why exchanges halt stocks sometimes, because if a stock goes down too much or up too much, the exchange will step in. They'll halt the stock and wait for an equilibrium to occur, and then they'll reopen it for trading, a few hours later or maybe the next day. And because the whole concept behind that is, to kind of smooth out those major ups and downs that occur in all markets. And we saw that in the nickel market. The LME halted the nickel market for, I think it was a week, until they could try to figure out how to bring some equilibrium into that market. And I think we'll see that in the silver market, because it's such a tiny market. We're producing 830 million ounces. You multiply that by the current metal price, call it $30, and it's what's that work out to? That's 15, well, more, about 20 billion a dollar market. How many times can that fit into Apple or Tesla or Nvidia? Then any one of those companies can buy the entire silver market in one fell swoop, just with the cash on their bank. And I think that'll happen. And I've been also, I've said a number of times over the last several years that I think the mining sector will eventually get bought up by the high tech sector, because they need the metal. And we've seen Elon Musk make a couple of investments in lithium and nickel. It's early days, but I think that the mining sector, or pardon me, the electronic sector will come in and start buying up some of these mining companies.
In today's news recap, silver price surge expected in 2025 as UBS predicts $38 target amid industrial strength. UBS anticipates silver prices climbing to $36 to $38 per ounce by 2025, driven by falling U.S. yields, robust industrial recovery, and stronger demand. Despite recent headwinds, the metal's dual role as precious and industrial could fuel its growth. According to investing.com, silver prices are expected to increase in 2025, according to UBS, which is boosted by lower real rates in the United States and higher global industrial production. This is despite the fact that the metal is struggling to match the increases spurred by the central bank in gold. Silver prices increased by more than 20% in 2024, but they have recently lost impetus as a result of increasing yields in the United States, a strong dollar, and growth concerns in global markets. With speculative short positions expanding and ETF holdings stabilizing following major outflows earlier this year, the metal is trading near its 200-day moving average. This represents a positive development for the market. In spite of these difficulties, UBS continues to retain its positive stance, with a target price range of $36 to $38 per ounce for the year 2025. Although rising yields have been a disadvantage, a decrease in yields might potentially improve the desirability of silver. There is a need for a shift towards cyclical commodities, which UBS anticipates will become more prevalent as the year 2025 progresses. Dual roles of silver highlight its market potential. Despite the fact that silver's association with gold continues to be high, the fact that it also moves in tandem with industrial metals highlights the fact that it serves a dual purpose as both a precious metal and an industrial metal. Now we'll show you the best clips of the latest interview where Holter talks about his price predictions, but first, smash that subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than the cost of a Financial Times paper, you can protect your online activity from prying eyes with the most reliable VPN on the market. Trust me, the only thing you'll regret is not getting it 6 months ago. Enjoy the episode.
There's about 1 billion ounces of silver that trades every day in the paper markets worldwide. So you've got this group of bankers, and they don't know about mining. They've never been to a mine. They look at a ticker symbol or a price quote, on their computer system, and then they're used to trading, within a range, and that's really it for them. They don't look at deficits. They don't look at where the metal's going. They likely don't even know, what the production worldwide is and what the consumption worldwide is, and the fact that their computer, it wouldn't even operate without silver, within it. So they're complete financial guys, traders, and that's really all they are. And when you have that kind of mentality, you see, a bunch of, like, the Reddit crowd, for example. It's a good example of what my point is, where you get a bunch of buyers that come into the market all within a very quick or short period of time, and the price spikes. And so you get all these traders saying, hey, this is a great opportunity to sell some silver. And they're not selling silver. They're selling paper. Right? And then they know from history that they'll never have to call for delivery of that silver. Right? It's just paper to them. So they know that if they could lean on the paper markets enough, they could just wait until the buying ends. And then when it ends, the price will drop, like any kind of supply-demand market in the world. Doesn't matter what it is. When the buying dries up, the price will drop. And they know that. And they'll just wait it out, and they'll buy back that paper, and they'll rinse and repeat time and time again. And it's the question is, will it ever end? And I think it will, because I think ultimately they will wake up to the fact that they have to have some backup. They have to have some silver behind that trade, because every once in a while there is a delivery that takes place. And if all of a sudden they wake up, their back office, their lawyers behind the scenes phone them up and say, hey, look, we can't get this metal. We don't need a lot of it, but we just need 50 million ounces to deliver it to Sony. And we've got this big short position, right? We can't find the ounces. And then that's when the traders will get a phone call and say, hey, look, we gotta stop or lighten up our short position, because we're causing problems in our physical delivery system, because they're quite separate. Like you don't have, like, the big banks, HSBCs or the JP Morgans, the guys that actually deal with the physical metal. They don't really communicate with their traders in the trading desk. They're trading their paper. They're completely different divisions within the bank, and there's virtually no communication between them. So when you close that gap and all of a sudden the communication starts, I think we're there, or getting close to there. And that's why I think we've seen the silver price improve over the last year, because people are waking up to the fact that this is an extremely tight market, and you can't be running 250 million or up to 400 million ounce deficits annually every year for 4 or 5 years in a row without it showing up. And it is now showing up. And, this year we should consume something in the order of 1.4 billion ounces. At least that's the kind of number that's being bandied around. And the miners, will produce about the same as they did last year, 830 million ounces thereabouts. And, these are huge deficits, and it will show up in price for sure.
Wow, what an episode today. Keith Neumeyer really brought the heat with his deep dive into First Majestic's game-changing acquisition of Gatto Silver and the Fresh Share buyback program. His breakdown of why the company is betting big on these moves really struck a chord with many of you out there. It's not just about numbers, it's about strategy, and Keith laid it all out, showing how First Majestic is stepping up their game and making bold moves to dominate the silver space. Thanks for tuning in and sharing your thoughts. Keep the conversation going in the comments below. What did you think of Keith's insights? Are you on board with First Majestic's big plays? Don't forget to like, subscribe, and hit that notification bell so you don't miss any future updates. Catch you on the next one.